And so in this video I'm going to explain how I got into this trade using dealing range theory. So in the monthly I saw this fair value gap, this bullish fair value gap. So the idea I had was I want to see support in this fair value gap and then see price target this buy side liquidity at 2787.44, right? Or at least the highs of those candles there, right? So that is the idea. And so I moved down to the weekly to refine the fair value gap. So on the weekly, what I saw was this. This fair value gap, which was embedded inside of the monthly fair value gap. So going further to the daily, I saw this, since again we are seeing the same fair value gap here. So what I did was I placed the fib on the swing high, which ran buy side liquidity, and then this swing low, right? So let me point that out clearly. And so what I did was marked out this swing high because we ran buy side liquidity to the left, this swing low we ran sell side liquidity, at least here, right? So from this low to that high. And then what is evident on the daily time frame is that this fair value gap, the monthly fair value gap, falls at 50% of the dealing range, right? At the 50% of the dealing range. And so what I did was I went into the lower time frame, so the 4-hour, and then what I saw over here was that right, we run liquidity, sell side liquidity here, had the fair value gap here, this bearish fair value gap. So initially I was thinking that probably this might hold price and then push it down, but you see higher time frame always has got the upper hand and has strength over the lower time frame. So we are coming from a weekly bullish fair value gap, and this is a 4-hour bearish fair value gap. So going into the new day, I saw that we printed a bullish fair value gap here, and then when price dropped into it, I bought at this place right here. And so I was looking at this place being used, right? I wanted to see price disrespect this bullish fair value gap and act as an inverse fair value gap, which we did. Then price broke through it over here, right here, see. And then currently we can see that all of this becomes what? A bullish order block, and we are seeing a low, a high, lower low we've broken through. So this will also act as a bullish breaker. This up close candles, a bullish breaker. And so I entered here, and then price has moved in my direction. So I went into the 1 hour this morning, and then I saw that price has left some bullish fair value gaps in there. So this was the first entry, the bullish fair value gaps. So on the 1 hour I saw this fair value gap, and then I entered straight away, covering the low of the fair value gap. And this is essentially at exactly on the break of my stop loss. So I'm thinking price might actually come down, take me out before it goes up to my TP level back. I'm anticipating that price will hold here in this bullish fair value gap and then continue its trajectory upwards, right? So it's with this intention that I got into the trade using dealing range theory. So what I'm basically expecting is that price holds firmly in this region, and then we continue to push up into, this. So this was an aggressive entry, but then at the moment price isn't giving me what I want, and so we'll wait and see if it will come here and then continue. And then I took a similar trade on silver. So likewise for silver on the monthly, there was, let me take these off, there was no fair value gap here, so I moved into the weekly. And on the weekly, you see that there is a fair value gap on the weekly. See that there's a bullish fair value gap on the weekly, right? So price tapped into it, and then so give us, a reaction upwards. And so what I did was, on the weekly, I took out my fib, mark this high to the low to see where we are in the range. And then you see that this fair value gap is first in a discount, right? We have this bullish order block here. We ran into this, created this, bullish order blocks. So you see that it is also rejecting exactly at the top of that order block. I was actually anticipating a deeper move into this thing before, and that will be clear when I move into the lower time frames. Okay, that will be clear when I move into the lower time frames. I wanted to see price at least move deeper here before I purchase, but it didn't give me what I want. And so going into the daily, right, you see that price already traded into that fair value gap at this point, right, into that fair value gap. And then we had a sweep of that low inside of that fair value gap. We had a sweep of that low inside of the fair value gap. So this is where I actually wanted price to come before I got into the trade. We are in discount and we are going into premium. And so coming in here into the 8 hour, you see that we also have this bearish fair value gap, but then higher time frame takes precedence, and so I was anticipating that would break above this what do you call it, bearish fair value gap. And at the moment we formed a bullish fair value gap in the 8 hour, and so I anticipate that we come in here and then we go, but I have a second trade in the 1 hour because I saw a bullish fair value gap, but then we might drop in here before we go up, so which means I'll take a loss here. That's okay. So going into the 4 hour, this is where I took the trade. Going into the 4 hour, likewise in the gold, so see we had a sweep of liquidity here, tapped into that, we ran above, created this fair value gap, ran into it, created another bullish fair value gap, and then the moment I saw that we ran into this we dipped into this bullish fair value gap, I saw that price was more likely to break this bearish fair value gap and then continue upwards. And so I bought here, then my TP is over here, right? And I think that's a daily no, it's not daily, it's a weekly fair value gap. Yeah, exactly, that's what you see in the weekly fair value gap. That's where my target is. So in the 4 hour, this is the weekly fair value gap, and so I am anticipating that price remains firm here, and then we see that we've dipped into a 4-hour fair value gap, remains firm in here, and then move upwards to my take profit level. So that is how I got into this trade. And then my second trade is here, my second entry into that fair value gap, also another aggressive entry, and then I'm targeting that high, right? So that is it with this trade using DRT.